Hello, good morning, good afternoon, and good evening from wherever you are in the world. We are connected here on Zoom, and we're excited that you have chosen to join us today for our webinar. As many of you know, Media Advisors is a global transaction and financial advisory firm. And here at Media, we are focused on really facilitating opportunities, facilitating capital, and facilitating investments into Africa and other emerging markets. My name is Nadine Mentor Williams. I am a partner and senior managing director at Media Advisors. And I'm extremely excited to have this amazing group of professionals, of leaders, and change makers in the African investment landscape. And so we cannot talk about African capital markets. We cannot talk about African investments, and we cannot talk about African transformational change without bringing those people who are moving the capital, those people who are in charge of where the capital is going on the continent. And so we have asset allocators that are represented throughout the continent here on our webinar. And thank you for joining us as we talk about what it means for African investments, African opportunities, and African capital. So today's webinar, hosted by Media Advisors and Standard Bank Group, we have been hosting these quarterly webinars and other thought leaders, thought discussions, whether it's through webinars, whether it's through fireside chat conversations, or in-person convenings, so that we are focusing on educating the global community about African investments. We're focused on building relationships across the globe, and we're focused on working together to collaborate, to aggregate, and to mobilize capital into Africa. Today's topic is focused on Africa's capital, Africa's future, mobilizing pension capital for inclusive infrastructure. During this session, we will seek to understand the infrastructure investment landscape from the perspective of Africa's institutional asset owners, exploring Africa's pension funds can increase allocations while meeting fiduciary obligations, and championing inclusive infrastructure that delivers lasting impact for their beneficiaries and their communities. And so this session, we have about the next hour. I will introduce our panelists, and then we will go into our discussion, where they will be able to share what their respective organizations are doing. They'll share how they identify investment opportunities, how they're working with fund managers, consultants, and other stakeholders, and how they're creating an inclusive environment that will bring everyone to a better future working collaboratively. Again, my name is Nadine Mentor Williams, and I just want to thank our Media team and our Standard Bank partners for facilitating and bringing this webinar together. We are governed by Chatham House rules. That means that everything here is not for media publication. We're here for discussion and educational purposes only. So without further ado, I would like to introduce our amazing panelists. First, we have Antonia Ifeanyi Okoro. She is the CEO of the Pension Fund Operators Association of Nigeria, also known as PENOP. She leads PENOP's strategic direction, stakeholder engagement, and industry advocacy efforts within Nigeria's pensions ecosystem. She's certified as a project manager practitioner with over 10 years of experience, and she has delivered projects across business development. She holds a BA in business economics from the University of Wales and an MSS in finance from Birkbeck University in London. And she has served in director roles across several boards. So we're welcome to have her represented. We also have Amos Ndungu, who is the General Manager of Investments from Kenya Power Pension Fund, KPPF. He is a seasoned finance and investment professional with over 13 years of experience across treasury management, finance, and investments. Since joining KPPF in 2012, he has brought deep expertise and strategic insight to institutional asset management. He holds his MBA in finance and Bachelor of Science in Actuarial Science, and is a CPA and a member of ICPA-K. And finally, we have Simpati Moichella, who is the portfolio manager for EPPF. For those who don't know, EPPF has recently been rebranded as just EPPF, the acronym. Ms. Moricella is an investment and pension fund professional based in Johannesburg, South Africa, with experience in portfolio management, institutional investments, and corporate governance. She currently serves as portfolio manager at EPPF, which is one of South Africa's largest pension funds, where she focuses on investment management and strategic portfolio oversight. She previously worked at the PIC, the Public Investment Corporation, and has also served on the boards of public entities in Johannesburg, contributing to governance, financial oversight, and strategic development initiatives. And so we are excited to have representation from South Africa, from Kenya, and from Nigeria, and just continue the work that we're doing. At Media Advisors, we are very intentional about bringing institutional investors, bringing fund managers, banks, and other key players together to talk about opportunities on the continent and to effect change on the continent. To date, we have been able to mobilize over $2.8 billion into Africa because of these relationships and because of these opportunities that we bring to you and we bring to the ecosystem. So without further ado, I'm excited to hear from our amazing panelists. And I will ask to ask Miss Antonia to please kick us off by telling us about your organization and what your organization is doing in the African institutional investment landscape.
Thank you, Nadine, and good afternoon, everyone, depending on what part of the world you're in, of course. You might be in a different time zone. It's afternoon here in Lagos. So as has been mentioned, my name is Antonia Ifanyukoro, the CEO of PENOP. And PENOP is the umbrella body for all licensed pension fund operators, managers, custodians, trustees, whatever your terminology might be in your part of the world. Nigeria has a very well regulated and well-established pension management framework, although it's just over 20 years old, but it's a very robust system which separates our pension duties across different categories of providers. And really, each and every single one of those providers, as long as you are regulated and certified to offer pension services within Nigeria, you are a member of PENOP. So across our membership base, we boast of assets under management of roughly $20 billion, or in Nigerian Naira, just over 30 trillion Naira. So it's quite a significant size of domestic capital. And the function of PENOP, as has been mentioned, is really about creating that enabling environment. So our priorities are diversification of the investment portfolio so that we're guaranteeing returns, but of course, safety and the fiduciary role that pensions play within any economy, and creating that awareness and education, sensitization, and so on and so forth, which is why an event such as today's is very interesting and for us. So I'm really looking forward to the dialogue, and thank you all once again.
Thank you so much. Appreciate that. Sapati?
Thank you, Nadine, and good afternoon to everyone. Again, it may be morning, it may be just early afternoon or evening, wherever you are. So good morning, good afternoon, good evening. As I have been introduced, my name is Sipati. I am in the employ of EPPF. And 2 years ago, we rebranded. You may have seen that our colors now include a green instead of the blue that was very much synonymous with ESCOM. Our employer, it's still a single employer, which is ESCOM, but we have rebranded and we have refined our strategies, which we will communicate in the market, to the broader market at the right time. But then to go into what the EPPF is all about, it's that EPPF is a pension fund registered under the Pension Fund Act and regulated by the Financial Services Conduct Authority and other related statutes. It is a defined benefit a fund with a single employer, that is ESCOM or the operation. Our assets under management are about 260 billion rands. In dollars, that would be close to about 14 billion dollars. We have a membership of just about 80,000, give or take, split 50-50 between the active membership as well as the retired members whom we are taking care of. The services we offer within EPPF, it's that of investment management, retirement funding, operation and administrative services to our members. So that is the EPPF in a nutshell. We are invested across the investment landscape. We have a majority of our funds held in the listed market as it was traditional with many of the pension funds or the financial services sector. And in the early 2000s, we started the private markets portfolio, which has grown from a single portfolio of just PE to include venture capital, infrastructure, real estate, and the private credit. And we have grown our investment book from just being SA focus to investment in the rest of the continent and in the global markets across those asset classes that I have listed. Our role, should I go into our role as we see it, or maybe wait for Amos to?
Yes, we'll go into that next. So I will
Okay,
turn it over to Amos and then we'll circle back to that.
all
Thank you
right.
so much,
Thank
Sapati.
you.
That's very helpful. Thank you. Amos, will you share from KPPF, please?
Okay, thank you so much for the opportunity. My name is Amos Ndungu, and good morning, good afternoon, and good evening, depending on where you are. And as introduced, I'm the general manager in charge of investments, and our core mandate is to manage the pension for our three sponsors. We have one major sponsor who is Kenya Power and Lighting Company. We also have Kenya Power and nuclear energy. So our core mandate and why we established, we established to ensure that our members, we promise a better life in retirement, and that can only be achieved through growing their contributions. So we are having three schemes, the defined benefits, defined contribution, and income drawdown. And in total, the assets under management in dollar terms is about 325 million and still growing. So we offer many services, key among them investment management. We also provide pensions administration, and we are a fully fledged organization with support functions. So looking at our journey, we were lucky to be early in alternatives, and we have basically invested both in traditional and alternative investments. And we pride ourselves in that we are the trailblazers when it comes to alternatives, because we invested in real estate, unquoted, where we invested in independent power producers. We've also exited the space, and we've also invested in private equity. And also currently we are looking into investing in private credit. So when you look at the investments, our mandate is to ensure that we diversify the portfolio, to ensure that we cushion on the downside that is occasioned by the fluctuations of the traditional markets. Yeah, so that's basically Kenya Power Pension Fund, and I'm sure we'll be able to give more details about our organization. Thank you.
Thank you so much, Amos. Definitely appreciate that and appreciate learning more about each of your respective organizations. I took a minute to look at who is on the participating, and we have asset allocators, we have pension plan trustees from the US on, we have asset allocators on from the UK, as far as from Asia. Obviously, we have many on from Africa as well. We also have fund managers on, we have consultants on, we have administrators on, we have bankers on. So people are very eager to hear from each and every one of you with regards to what your organizations are doing. So let's get into the focus on infrastructure investment specifically. And part of the reason why we want to talk about infrastructure investment is because we are helping to move infrastructure opportunities on the continent through different initiatives. And I'll talk a little bit more about AFIX, which is a platform that we're launching to connect asset allocators who are on right now to talk and learn from each other. So this is a little sneak peek of what we're going to do at AFIX next month. But really, can you, Amos, and let's start with you, Amos, talk a little bit more about what KPPF is doing with regards to investing in infrastructure specifically, and how do you identify infrastructure opportunities? So I'm going to combine those two questions. So what are you doing with infrastructure specifically in your organization, your portfolios, and how do you identify infrastructure opportunities?
Okay. Thank you. And for Kenya Power Pension Fund, the beauty is our sponsor is in the energy space. And given the capital outlays, it's usually quite expensive to fund projects, and which has occasioned to the need for having private players like independent power producers. So over 30 years back, we were able to invest in independent power producers. And basically what works well for us is to invest majorly in what we understand. And because we are in the energy space, it gives us very easy time, because at some point, our board members who are trustees, they are on the buy side. And of course, when now it comes to looking at the opportunity, they also have visibility for the opportunities that we present. So what we are doing about infrastructure, number one, is to ensure that whatever investments are being done in the energy space, we have visibility through our trustees. Then number two, we don't just invest for the sake of investing. So it's important to be aligned with the investment policy statement, which accommodates infrastructure. Then number two, we have to be aligned with the regulator, which is the Retirement Benefits Authority. And thirdly, we also work with fund managers. Whatever we are happy with, eventually we have to take it through the fund managers. So that's on the energy space. We've expanded our investments to other infrastructure related investments. And recently, we did an investment in a private equity that is specific to infrastructure. Why do we like infrastructure investments? Number one, it's the nature of the cash flows, because the kind of cash flows that come through once you sign the agreements, you find that the cash flows are almost regular, like a government bond. So also, just to note that once you sign off, many investments are in hard currency, majorly euros, and also we have some in euros. So once you make the investments, you're able to also gain from sometimes the Kenya shilling has been weakening, so there's a forex. So it has been able to work well. And what we usually do is to look at the models that are provided. We ensure that we align the models with the agreements that are provided. And once we agree on that and we invest, is to monitor that those cash flows that are in the model come through. How do we identify these opportunities? Number one, it's very easy. Here we have very important players. We have a player from Nigeria, we have a player from South Africa, and of course, from here, it forms an opportunity where we can share the pipeline that you're looking at. So networks is very key, and I appreciate my investors. So number two, we have forums, the super returns of this world, and many Africa forums, and we can be able to get those opportunities. Thirdly, you can use finders, and there are people who have positioned themselves as finders. And just to ensure that you have the right people, and especially when you go to these forums, there are people who position themselves and they're able to sell themselves as finders, and you pay a small fee for finder's fee. So thirdly, I think it's an easy world with technology. If you tweak, for example, the networks, LinkedIn, and whatever you want, and you can be easily looking at who is fundraising, who is looking at what, and of course, the circles. The only thing maybe I want to highlight, these opportunities, they are not easily visible. So if you walk on the streets, you will not be able to see these opportunities. But there are few rooms where if you're able to identify them and attend, these opportunities are many and they are quite a number. So you need to know the right places to be taking tea, the right people to be talking to, and happy that MIDA is now becoming part of those forums where we can be having tea and share these opportunities. So in short, that's what we are doing and our infrastructure journey. Yeah.
Very good. Thank you so much. That's very helpful. And these convenings, these opportunities, even connecting here and then being able to follow up. You're right. On LinkedIn, we have quite a few fund managers on, including women fund managers who are, first-time fund managers, and they're trying to establish these relationships. Our own CEO, Emric Saha, is in Kenya today, meeting with asset allocators and with fund managers to help facilitate more of these type of relationships. So we at MIDA really do divide and conquer to make sure that we are touching on different aspects of the ecosystem. Antonia, would you mind sharing the same question, answering the same question with regards to how your organization is addressing infrastructure investment opportunities? How do you identify it, and what you've done with it? Thank you.
Thank you. Awesome. Okay, so for us, like I mentioned, we're an association of multiple organizations. So within our membership, we have 27 licensed pension fund operators in Nigeria, and they're the only ones recognized by regulation to provide pension service. And so the entire pension food chain is sort of managed by this licensed group of corporations, of members, of organizations. However, there is a centralized standard for all operators, all licensed pension fund operators in Nigeria, which is established within what we call the Pension Reform Act or the
Mhm.
PRA. So the Pension Reform Act was enacted in 2004. When I did my introduction, I mentioned that the Nigerian pension system is just a little bit over 20 years old. So that's when it came into being. And it defined a contributory pension scheme. That's the type of pension scheme we operate, which means that it's fully funded. So employees contribute, their employers contribute. It's then the job of these licensed organizations or operators to ensure that the funds are well managed. And how it's done, as I was mentioning earlier, is in line with the Pension Reform Act. So it was enacted in 2004, reviewed and strengthened in 2014, and it establishes really, really clear guidelines on the types of investments that operators can invest the funds that we accumulate across the pension ecosystem in. Infrastructure for us is an emerging area for various reasons. Our system is quite new, as I've mentioned, even though it's very robust. And traditionally, as anybody that has gone through this life cycle of pension evolution within any economy, you realize that traditionally most countries start with the secure, well-known, well-established investments, so the government bonds, treasury bills, and so on and so forth. And that was traditionally Nigeria's story. We had a very significant allocation, also as defined by the regulation in those traditional areas. But in the last year or so, that has shifted. So we now have a higher threshold for alternatives, which includes infrastructure. And we also now are able to engage with sort of the providers within that area, the finders, the vehicles, the fund managers who have expertise in that area to grow our system. When we're assessing who to engage with, the whole, it being safe and secure still is a strict requirement. So we would typically look for triple B credit rating, depending on the type of infrastructure investment it is. Usually if it is a fund, we're looking for sort of how credit worthy are you as a fund manager? We're looking for what is the liquidity? Are there any sovereign guarantees? and so on and so forth, so that we are ultimately able to exit if we need to easily enough. So I would also say that traditionally, we have tended to go down the investment fund route or via portfolios within the private equity space that are set up to invest in infrastructure rather than direct. That as well is now changing. We're looking at how we can do public-private partnerships that still meet our credit worthiness criteria. We're looking for how we can invest in infrastructure that has economic impact as well and helps to transform Nigerian economy, ultimately transforms the African continent, and so on and so forth. Those are the areas that I see the Nigerian pension system evolving into as we go into the future. But again, for us, we're at the early stages. It's an emerging area, but it's one that's very interesting. Thank you.
And you're very welcome. And you're at a very exciting stage that you get to really curate what you want this to look like. And working with your 27 pension funds, you get to work together to identify the priorities that are for your country, for your respective organizations, and who you want to work with to affect this. So this is at a very early stage, and being able to have Penn up at the head of that and being able to lead the efforts, it's really critical. So kudos to you and your leadership and what you're doing. So thank you. Thank you. Sapati from EPPF is able to definitely share about what you've done on the infrastructure investment and what EPPF has done with regards to infrastructure investment and how do you identify opportunities and evaluate those opportunities.
Yes, thanks, Nadine. What we've done in the infrastructure, let me start off by saying private sector and institutional investment in infrastructure in South Africa dates from way back. I mean, the popular program being the PPP road concessions that were done pre-2010. So institutional investors in South Africa, banks and any financiers that are out of public sector have been participating in the funding of or financing of infrastructure in the in SAA through various model concession PPPs and the recent one being the REAP program that is pretty much really funded by the private sector. And EPPF has been a part of that journey. Like I said, EPPF has had the private markets portfolio from the early 2000s, primarily really investing through private equity firms. So fund managers, GPs, private equity houses. So from there, the EPPF has always participated. I can mention one of those, the platform being AIM, which was started way back and it invested in infrastructure, and we had communicate commitments in AIM with exposure into the road infrastructure, the PPP on private prison. Don't want to say much about that because it had controversies at some point, but nonetheless, those were some of the assets that were in the AIM portfolio, which we had commitment in. And there have been, other programs now that have come through the REAP program, which is massive program that invests in renewable energy. And we have participated in that program through the various managers that we committed capital with from round one up to, I think, round four, round five, I think around six, it's underway. So we have a significant exposure into the renewable energy sector through the REAP and through the many GPs that we are invested in or committed with that have investments in the renewable energy. Directly, we also have looked at some opportunities that have been presented to us directly. There is a few of those that we have looked into, and we continue to assess those opportunities in the digital infrastructure space, in the housing space, in education, in healthcare. We've got exposure into those sub-asset classes, sub-sectors of infrastructure that we are invested in directly. I can mention a few like your Nova Pioneer, your Busamet Healthcare. Those are the direct investments we have concluded in the infrastructure, social infrastructure space. We have further exposure through funds, again in education and in housing. There are the IHS, we have commitments in those, and those are all investments in the infrastructure space, multiple subsect of infrastructure that we have commitments in. How do we identify infrastructure? I mean, we have the investment management portal, which we launched 2 years ago, and it's a platform where fund managers as well as project developers can and do present their proposal. So they would upload their proposal on the program, and we review those proposals from there. And other than that, we engage with other institutions that are perhaps in the front run doing development, like our DFIs. We now and again touch base with them either through the Asset Owners Forum or directly, and we know the pipeline that they are working on and the sort of opportunities we'll be interested in once those are available for fundraising or they approach a fund close. We also do try as well to keep tabs with the banks who are also very active in the space and leverage of the pipeline that they're working on, from especially for equity funding. We always get the banks approaching us with numerous opportunities. But maybe let me talk to what it is that really makes infrastructure of interest to us. If we look at the attributes of an infrastructure assets or asset, I mean, we look at the core plus and maybe value add type of opportunities, and we very much interested in the asset class because of its stable and predictable cash flows. The core plus would come with the contracted PPAs or offtakes, which makes the cash flows from those very predictable. We like the fact that the tariffs contracted to under those PPA are inflation linked, which provides us with a natural inflation hedge. We also like the fact that the infrastructure has a lower, maybe to moderate volatility compared to the traditional asset classes, equities, and those other ones, which then diversifies our portfolio. As I've said, that our portfolio it's across the listed asset classes and in the private markets. So we use this specific asset class to diversify our portfolio. Lastly, infrastructure, it's a long-term game. It may be illiquid, but our return are enhanced when correctly priced for that illiquidity. So we are able to earn risk-adjusted return from these asset classes. And those long-term contracts offer us the long-term cash flows, which match our long-term liabilities as a pension fund. As you would know, those PPAs are 10 years, 15 years, 20 and above. So those attributes really augur well for us in in attracting us into the infrastructure space, because they provide the diversification, the predictability of cash flow, and a natural hedge, and we are able to earn a risk adjusted return. So those are the key, perhaps, the things that attributes that we would use to identify what is a suitable infrastructure opportunity to us, especially because we play in the core plus and a little bit in the value add risk strategies. Then we would look at the return profile of those strategies and whether they meet our requirement. We look at the absolute return targets of CPI plus 5 in our world. We would look at the PME, whether these asset classes able to beat the listed return. If we take money from the listed into private markets infrastructure, are we able to generate return that beats those? So, and then there's a well-established industry standard due diligence process that we will engage on to filter those opportunities and decide which of these assets we will invest in. Let me pause at that. Thank you.
That's great. Thank you so much, Sapati. You have definitely done a lot. And you're right, the infrastructure industry has been very robust infrastructure industry in South Africa for many years. And even as you were sharing, as you're talking, I was just seeing the opportunities for engagement, more engagement between you and Antonia in terms of just sharing best practices. And with Amos, that's part of what we're doing here. How do we share what we've learned? You, with your robust long history, how do you share what you've learned, the good, the bad, everything in between, and allow Antonia to be able to ask questions as they're just really emerging more into this and opportunities here to learn from Amos. And these are some of the things that we are doing with, and you mentioned AOFSA, and what we're doing with AOFSA, the Africa Owners Infrastructure of South Africa, the fund that really looks at how do we collaborate, how do we work together, and taking key asset allocators, different asset allocators, and saying, how do we work together to identify infrastructure opportunities? How do we work together to evaluate them? And then ultimately combining assets to have a greater impact on infrastructure. And to date, the Asset Owners Forum of South Africa, which is focused on infrastructure under the guidance of BESETA, it was created in collaboration with BESETA, with Media Advisors, working with the US government under the Secretary General of Anna Marie, who is exceptional. If you all have worked with BESETA in any capacity, you know that Anna Marie is really the engine that's making it all happen. But how do we bring these asset allocators together? How do we make sure that there's a structure in place? There's the fiduciary responsibility that they have to their respective organization, and that they have to Asset Owners Forum of South Africa, and working together to really mobilize capital at scale. And to date, AFSA has been able to mobilize over $600 million into infrastructure in South Africa. And now, we're looking at opportunities to expand this type of concept and expand the education, the relationship building on a Pan-African level through AFIX. So AFIX is an exchange that's focused on infrastructure that is Pan-African, that will be launched following and alongside the BESETA Winter Conference. So we know we have many asset allocators on, we have many fund managers on, and we have many different stakeholders who are on. And so AFIX is going to be launched alongside of the BESETA Winter Conference. The BESETA Winter Conference kicks off on June 1st. I think to date, they have almost 800 people registered for the BESETA Winter Conference. And AFIX is an educational institute where we're able to share best practices. Asset owners will be there from multiple countries and share what we've learned, what works, what doesn't work, and identify and look at new investment opportunities. And part of AFIX, there will be site visits. We're going to at least 3 different sites in South Africa so that there's a hands and education and field connection. So again, aligning the education with the relationship and the opportunity to mobilize capital. And we're launching it again on June 1st alongside the winter conference. I know Sapati will be there with members of AFSA. And I do want to also highlight the importance of just collaboration and convening. Again, we talked about AFSA, Amos being part of CAPFIG. We helped to bring this consortium of asset allocators together within Kenya, and they've been able to mobilize capital and have impact. Obviously, Kenup is doing that in Nigeria as a nonprofit association, bringing together these 27 pension plans. And so the opportunity to collaborate and work together, that's how we propel and that's how we make impact. I do want to take a few minutes to talk a little bit more about impact and what that means and how you're incorporating it within your organization. At Meet Advisors, we have launched WeMe, which was the Women Empowering and Mentor Incubation Program, which brings together fund managers, first-time fund managers, and just expose them to people like you. We worked with Standard Bank Group and UNECA to launch AWIF, which is the African Women Impact Fund. And so it's so important that we continue to make sure gender is part of the discussion when we talk about investments, that we make sure that our youth is part of that discussion, and we make sure part of that discussion includes access. And so I would like to ask Amos, if you would like to share a little bit about how gender, how socioeconomic factors are included in your investment guidelines and your investment evaluation.
So thank you. And for us, we've been able to create a screening criteria, which we have been able to improve over time. And when we started many years back, it was not as rich as it is right now. But with time, we've been able to improve that. So number one, I think every day is a learning day. And when we, for example, co-invest against investors like DFIs, they are quite strong when it comes to matters, youth, women, the impact, pollution, ESG. So over time, we've been able to incorporate that in our criteria. And for example, when I mentioned that we invested in PEs that are focused majorly in infrastructure, we will be able to invest in PEs or opportunities that are keen to, number one, take care of the environment. Then number two, be keen to say offer a third of the opportunities to the disadvantaged group. And by that, I'm looking at the youth and also the women. Also, we look at the impact around maybe what they do for the communities where we invested. And finally, it's on matters ESG and the environment to ensure that whatever returns you're making, we don't make returns as we harm the environment or people who surround us. We've gone a step higher, and there are requirements when it comes to reporting. And when the promoters or we've made the investments, we are required them to give us reports, and we usually get reports on a quarterly basis, and we have metrics and checklists on matters that we want them to report. So it will be strange when we attend meetings and you happen to spend a lot of time talking about matters like safety, how women are handled at the workplace, and sexual harassment and such like. So we don't just want that good return or alpha. We want also to ensure that we have impact, we do it responsibly. We have had an advantage of going through trainings, and what we've done, we've spent some resources, and we're part of the training that we usually have through the training needs analysis. Key among them is to have trainings that are enhancing the knowledge of our board and also the secretariat to ensure that whatever best practices are happening out there, they are aligned to best practices. And of course, as I mentioned, we also ride on what our co-investors are teaching us. So basically that's what we are doing as a fund. I'm sure we are not yet there, and I'm eager to listen to what my core panels are doing, so that after this, my take home and my homework will be to improve, so that next time we have a similar webinar, we can also improve the same. Thank you.
Wonderful. Thank you, Amos. And what you're doing is definitely meaningful and it matters and is much appreciated. Antonia?
Hello. Okay, fantastic. So for us, and yes, thank you so much for what you mentioned earlier as well. I wanted to just touch on that, and I think definitely for the Nigerian market and the Nigerian pension system, and indeed our investment portfolio, the breadth of investments, and a diversification of investments, we definitely see like South Africa as a country we can learn from and grow from. So it's really exciting to be on this call and to engage directly. So for us, our aspirations with infrastructure, we see it very much as ticking multiple boxes. The Nigerian pension system is a young one, but we're now maturing. We're in the maturity phase, and we want pensions to be more than just a regulatory requirement, more than just a mandatory deduction. We want it to be something that becomes a tool that reforms the economy, reforms society, and of course provides that safety net, that security, that income stream when you need the most. And having uh, infrastructure, or playing a more significant role in infrastructure, and having a diversified investment portfolio, especially from the infrastructure criteria, is a significant part of that. In the immediate term, projects that contribute to the society, so whether it be creating good roads, whether it be creating stable power, whether it be creating affordable homes, those are things that are really, really dear projects to our heart as an industry when we think about how we want to navigate our infrastructure investment journey going forward. We want to work with technical partners because each type of infrastructure investment will require a different type of sort of credit analysis and credit scoring and all of that, just to make sure, of course, that the investment funds are protected ultimately as well. But that's how we see ourselves transitioning. We're looking and working on an infrastructure consortium. It's something that's in the pipelines, and that body will be made up of all of the key stakeholders and, of course, the technical experts that will help hold our hands as we go through that journey and chart our way for the future. Thank you.
Thank you so much. That's extremely helpful. And we could definitely be helpful with regards to creating that consortium because that's what we've done in South Africa and in Kenya. So happy to be a resource. Sapati, would you mind highlighting some of the work that you've done and what you're doing with regards to focused on gender, youth, and other areas of impact and inclusivity? And
Sure,
while she's
thanks.
getting off of mute, I just want to tell our participants we will be reserving some minutes at the end for questions. So our attendees, so please use the chat box to ask your questions, and we will have time for at least 5 to 7 minutes of questions, hopefully. Sorry, Sapati, apologies.
Oh, thanks once again, Nadine. We, as the EPPF, have taken a very pivotal position in supporting um, transformation, sustainability, ESG, in the E, the S, and the Gs. And in this case, we're talking mainly the S part of our investment. So to start with, you know that in SA there has been BEE codes and triple BEE codes, which we have aligned with from way back. And one of the conditions that we would impose when we assess investments, it would be that at least the managers that we're working with or project sponsors that we looking to invest in those opportunities they present, at least they are triple BEE level 3. And where they are not, we enter into a plan to see to it that when we leave that investment, we have made an impact in terms of racial transformation, gender transformation in that particular business or the manager or in the portfolio companies that the manager would be investing in. So our long-standing policy was in the BEE and the transformation policy, which looked at racial and gender transformation in the investments that we go into. We have since evolved to a bigger sustainability policy that has a social policy, a climate policy embedded in that. But then, if just to stick into the sustainability policy, there are 4 SDGs which we have intentionally chosen that with each investment that we go into, we need to make sure that at least 1 or 2 of those SDGs are met. I will pick 2 of those. The first one being gender equality, and the second one being, that will invest in innovative industries and infrastructure. When we look at the gender equality, we have a social policy embedded in the sustainability policy, which then sets the target for the EPPF that by 2028 we would like to have 20% of our assets under management being invested in investment that are women-owned and women-led. Decision makers in those businesses are, women, senior management in those businesses. It's senior women of different races, but preferably a transformed a base of senior female decision makers, CIOs, CEOs, or women-owned investments. So the target is 20% of our AUM being under the control of such platforms by 2028. And we went further to say by 2033, we would want to see 30% of our AUM being committed in platforms that have senior, again, female investment professionals, CIO, CEO, or that those platforms are women-owned and led. So, meaning when we make investments going forward, we'll pay close attention to that gender balance and make sure that we give preference to those platforms that help us get to this target, to achieve this target by 2028, by 2033. That does not mean we will compromise on the financial return. So primarily, a platform should offer the financial returns we require, and these women should have the requisite track record, knowledge, and experience in the asset classes that they are partaking in and they require us to invest in. But certainly we'll want to support such platforms that are women-owned and women-led. You would know that in 2020, we launched our incubation program where we committed 2 billion and we have 9 managers that the 2 billion is committed with. And again, the target there was specific that we wanted 30% of those funds committed with platforms that are women-owned and led. And we are happy to say that the target was reached. We have the likes of Mahlaku, which is an infrastructure fund. They invest in renewable energy. We have Ditiro, We have Urban Crawl, which is a real estate. Those two are real estate platforms that are led by women. So we have made those. Decisions and initiatives. We have taken initiatives to ensure that we support women in the asset management space, and we want to grow with them. We don't want them leaving the sector for whatever reasons. Really, we want to grow those platforms that are women-owned and women-led, not only in the asset management space, but across the economy. We want it is our intention to continue to support investments that are brought by women, and they participate in the decision making across the length and breadth of the investment landscape.
Thank you so much, Sapati. That's so important that you are identifying ways to include women in different areas of the investment landscape, and you're actively creating programs and creating opportunities for them. And they have stepped up. There are women fund managers. We've worked with amazing women fund managers who are ready and willing, who have the pipeline, who have the expertise, and they just want to have the opportunity and the access to present. They're not looking for a handout. They're just looking for an opportunity to present. And so if you're on all the amazing women fund managers or first-time fund managers, please do connect with our amazing panelists on LinkedIn. Like Amos said, there's opportunities for connection and convening. There's opportunities for engagement. So if you're looking for a sign, consider this your sign. I know we only have a couple of more minutes. We do have one question that came in the chat. And it's interesting because thank you, Emmanuel, for your question. And the question is really looking towards US. He was asking, I'm going to abbreviate the end. I wonder what work is being done in the US to progress policy regulatory reforms to help engage commercial and institutional capital from US to play a more active role in Africa infrastructure and other key sectors. We're seeing USTA, USDFC come in, but I believe more US private capital is needed and is yet to actively come in a visible way. You are right. I think we would all agree that more US private capital is needed. We have hosted different webinars that highlighted some of the US asset allocators. We have worked at Meet Advisors to lead delegation trips of US public and private pension plans, banks, of different private markets as well, private market owners in terms of private companies to come in and working with the US government, working with USTA, working with the USDFC. We are working with several private companies to bring opportunities to the continent, working in collaboration with the USDFC. So we agree with you. I think there needs to be a call for capital because, again, it's going back to the education. I think that many of these US private sector, they just don't know Africa as well. And so the education is needed, the relationship building. Part of the reason why we hosted delegation trips, because where would they have an opportunity to build the relationships with the Antonias, with the Sapatis, with the Amos, if not for opportunities that META brings to convene these important stakeholders and to learn from one another and to understand that there's opportunities for co-investment. And so we were able to work with a couple of the fund managers, African fund managers, and African asset allocators and US asset allocators to co-invest within fund managers that were distributing capital to in Kenya, in Western Africa. And so we are more than willing to help. There should be more investors. If you know of investors, if you know of opportunities, do let us know because we're happy to help facilitate the relationships that are needed to strongly move this needle forward. We're happy to facilitate these type of convenings to continue to education. So if you identify pockets that need to be informed, let us know and we'll bring these opportunities to them and working with our partners. And I see that Terrell Gamble was on, Lee Stevens is on. They are both key US leaders who are advocating for Africa, who are advocating for engagement, capital to move from the US into Africa infrastructure. And so we have advocates, we need more ambassadors. And so if you want to work with us on this journey, please do reach out to me. We want to make sure more people know about what's going on in Africa and more people are involved because there should be more relationship building between the US and Africa and other emerging markets. I know that I want to be respectful of time. We have probably time for a couple of more minutes. 1 minute that there was a question that was asked about how do you balance between seeking more impact and requiring the level of returns necessary to meet your fiduciary duty? Do you want to answer that, Amos? How do you balance between seeking more impact and requiring the level of returns necessary to meet your fiduciary duty? We have a few more minutes, so I'm going to ask for brief responses. For Amos.
Yes. From experience, you can't have the return objective alone. You have to carry on all the objectives. And from experience, it's not that as you try to have impact, sometimes it even leads to better return. Depending on what we are investing in, some of the things that, for example, if you are keen on, say, the number of employees that you have, the impact on the women, you'll realize that it gives you a stronger brand, which might also lead to better returns. So if you are having a stronger brand because of how you handle the community, how you give back to the same community, it has had an indirect impact because you'll have better profitability, better dividends, and in the end game, a win-win situation. So also just to note that if you are targeting a community, you can't have a blind eye on the same community because if you fail to do that, unless you have maybe export plans, and it might be a challenge. So you start from home and charity begins at home. You have an impact and benefit from that. A good example to look at it also is if you have, say, pollution, it might also be expensive to maybe maintain your infrastructure. If you have industries that are, say, spoiling iron sheets, etc., you might also need to have huge capital outlays to repair the equipment and the, say, the premises that you have, which also hurts the return. So I believe it's good to have both in mind, the impact as well as the return objectives. But of course, it's to have a balance, not skew towards any. It's to have a proper balance of the same.
Thank you so much, Amos. I'm not sure if anyone else wants to answer that. I think that was important to have. And each organization has your own way of looking at it, your own criteria, and just really understanding each organization's role and how they address it.
Yeah, for us, Nadine, it's not a trade-off between returns and impact. It's both. We pursue the both, and primarily we will bank an investment that has that offers the proper financial returns that we require. I mean, if we are to sacrifice the financial returns for impact, I don't think we'll be able to sustain those the impact outcomes without the project being able to stand on its feet and being financially sustainable. So we have to make sure that the project is financially sustainable so it can sustain the impact outcome. So our approach, first and foremost, is for the project or the opportunity to tick the right boxes in as far as the financial metrics are concerned. And then we would say, how do we augment this financial outcomes? And depending on where the project is, those outcomes could be bringing the community along. I mean, if we use the example of the renewable energy and the impact story under the renewable energy, you have round one, two, three, which are offering very good terms in the high teens, 18, 20 gross, and down to about 15% net IRR. And those projects were concluded with the terms or the conditions that at least the communities within the 50 square meter radius should participate in those. And then there was an ESD budget that those projects would spend on the surrounding communities. Um, the project would spend some money on those surrounding communities, whether be it to help them build an early childhood center or some farming opportunity or, upgrade a school, a library, whatever it is that the community would elect to spend that budget on. But because those projects are financially sustainable, they are then able to make the funding available for the community development, and then they are able as well to provide the dividends to those communities to further develop themselves. One may talk about the pricing of the debt on those community trusts and employee trusts, but I think there are solutions we have seen to try and really increase the dividend flow to the communities so that they are able to carry out the development. So for us, we don't look at the impact as a trade-off for on returns. The two
I
are
think that's
very important. Yeah.
I love that. It's very important. They're too important, and you can have both. You can have both. And Tony, I'm going to ask you a different question. David from Mario, who is a U.S. Investor, he's a very leading U.S. investments person. So going back to that question about U.S. capital, U.S. mobilization of capital, but he's also Nigerian, proud Nigerian. So he asked, did you state earlier that the Nigerian Pension Fund will partner with Meet Advisors? You did not state that, but we're always offering out services to establish effective guardrails, risk controls, and regulatory oversight to protect workers' retirement savings, investing in infrastructural projects. So is that when you're looking at that, is that how you're
Yes,
looking at
yes. So, I mean,
opportunity?
where we recognize within the Nigerian pension space that we have to diversify the investment portfolio, right? So as of today and historically, majority of the funds that are under asset management are in traditional portfolios. So government bonds, government treasury bills, and so on and so forth. But we realize balancing that fiduciary role alongside balancing that security of income, it means we have to be a bit more adventurous, a bit more daring, a bit more dynamic as well, as we chart the course for the future. I think I also mentioned that we are moving from a state where the pension industry is now is in the maturing stage. I wouldn't say we're mature yet, but we're definitely maturing, and we're moving beyond pensions being a regulatory requirement to pensions being a tool for reform even. And really, we wanted to transform the Nigerian economy, the African continent, and be a global player in the long run. That's the vision. So we want to work with any credible partner that is aligned with that vision. We haven't committed to anyone. So this probably isn't the right forum to do something like that either. But the appetite is there, the willingness is there, the vision is there, the desire is there, the ambition is there, all of the right ingredients are there. And also the regulatory framework is also now more accommodating of that kind of thought process. So yes, I think it was you that said that earlier, Nadine, that we're at a very exciting moment. We are at a very exciting moment right now. Thank
I
you.
love that. I love that. Thank you so much. And I think I am excited because your leadership, I know that you're bringing lots of positive changes, lots of important changes, and impacting the policies the guardrails and the risk controls that the investing community is looking for. So just want to say a big thank you, thank you, thank you. This brings us to the end of this amazing webinar. It was very educational. I learned a lot, and we've been talking, but I still learned a lot. I want to say a big thank you again to Antonia, Sapati, and Amos. Thank you for coming to represent your respective organizations, PENUP in Nigeria, KPPF in Kenya, and EPPF in South Africa. We want to continue these type of educational webinars. We want to continue these types of relationship building, alignment, understanding, and ultimately, how do we work together to mobilize capital to help and support the infrastructure development across the continent? The next steps is come join us at AFIX, which is happening in Sun City and outside of Johannesburg in about 3 more weeks on June 1st. So we're looking forward to seeing some of our partners there. Engage us, talk to us, engage the panelists. We want to make sure that this is just not here listening. We want to be active players in the community and the environment that we all want to live in and benefit from. And we want to make sure that that's inclusive. I want to say a big thank you to Standard Bank Group for their support and their help in putting on this webinar. The big thank you to Basetta and AFSA and to CAPFIG and to our META family. It is a teamwork. We're more than willing to work with partners, so call us. There is a call to capital because we need more capital, and there's a call for partners. We need, like Antonia said, viable partners who are going to help us move this needle forward and create the impact that we all want to see. So thank you so much. This will be recorded. This will be available. So for those who weren't able to join, send it to your network, send it to your colleagues, because this is great information, important information. And we want to, again, thank our panelists for your time, your expertise, and your passion for what you do. What you do matter, and thank you again for your leadership. Take care, everyone. Have a great day, great evening, and make it an awesome day.
Thank you so much and
Thank
goodbye.
you. Thank you, everyone.